Hello everyone, this is Dr. Good Vibe from OmegaSupreme.com. Today is October the 5th, 2010, and we're going to be covering today's currency ideas and strategies and the latest news. Let's start with today's Forex calendar. And quickly last night, covering the Aussie dollar, retail sales, trade balance, cash rate, RBA rate, and monetary policy statement were all released last night. Really all kind of semi-negative for the Aussie dollar, but not too negative, and frankly the markets didn't react negatively to this news at all. Today's news really covered ISM non-manufacturing, which was positive, 53.2 versus a forecasted 52.1, slightly positive, not huge news on the USD. And also, if we're looking at the news, the euro hit 6-month high, and if you really dig and drill down to one of the most important pieces of news you should really kind of pay attention to, and that is the Mexican peso gains as Bank of Japan promises virtually zero interest rate. Why is that important? It's not that we care about the Mexican peso at all. We don't. It's that the Bank of Japan is going to continue its virtually zero interest rate policy. What does that mean to us? It means that the carry trade is still going to exist. It means that traders and investors and hedge funds across the world are going to borrow yen at virtually zero interest rates and basically go and try to find yield with it. And that means that it's going to invest in people, individuals, hedge funds are going to try to invest in high-yielding currencies, high-yielding bonds, stocks, essentially anything that will come up with a return greater than 0.1%. Then that's what the yen is currently right now. So an individual, a high net worth individual, can go and borrow yen at 0.1% and invest it somewhere else and get I don't know, anywhere from 2 to 5% return on a pretty safe bond, and essentially it's making free money. And why is that the case? Why is the yen so why is the interest rate so low? Well, the Bank of Japan is currently worried about deflation in Japan, and with prices dropping and deflation getting worse, Japan has to currently keep interest rates as low as possible and continue quantitative easing, which means pump as much cash and increase the monetary supply as possible in order to cause inflation, basically, and get their individuals, get people that live in Japan to spend more. And that's one of the ways, one of the tools that it's trying to do that. Interestingly enough, it's been trying to do that for roughly 10-15 years, ever since their own real estate bubble burst in the mid-90s, and it hasn't worked since. So what does that mean to us? How does that impact us? It means that basically we're going to get lots and lots of risk-on behavior, and you can see that on today. S&P 500 is up quite a bit from yesterday. Now it went up about 1.5%. And remember, if you were catching my videos from the other day, we are seeing huge movement today, and we saw a really solid move break above this resistance point right here. We're seeing the volatility now increase, as well as we're seeing that bounce off the CI off of its lower band. So all very positive. If tomorrow the S&P 500, when it opens at or above the close of yesterday, or rather today, basically we're going to see some very good positive momentum continuing forth. So my goal really is that if tomorrow we see price open at or above 1,160, that's a very positive sign for the S&P 500, and we may see some more upward momentum and risk-on behavior. If we check out the TSX, basically the TSX did much the same. It gapped even higher, and it's doing extremely well. It has really done well in the last couple of weeks, and it has cleared out this resistance point right here. So if we go back and look back to end of April, it has broken that resistance now. So does that mean clear skies for the TSX, for the Toronto Stock Exchange? Maybe. We're seeing some volatility increasing, and really CCI is still continuing to be up. I would long-term trend right now is still upward. There's an upward momentum. Basically, the Ishimoku indicators still are upwards, are pointing upwards. There is no sight in really going to see anything flattening out at this point in time right now. So still bullish on equities on the TSX and the S&P 500. Now let's continue with our currency, our favorite currencies. So what happened with the Euro USD? Really looking at a 4-hour time frame, the Euro USD bounced off of its lower regression line and then bounced off of its Ishimoku lines, the Tenkan-san and the Kijun-san. So now we're seeing it kind of at sort of the center line of its regression. So this would in fact be a good opportunity to sell some positions of your Euro USD if you can. Otherwise, I would probably take about half my positions off right now. But frankly, I don't trade the Euro USD, so I just use it as a gauge for the entire market. We're seeing some overbought activity on the CCI, and we're seeing some very high volatility. Looks like it's higher than its topmost band. So I would probably sell some conservatively right now and see if it goes up any higher. If it does, great. If not, we've sold some and we're doing well. But again, it looks like the markets are risk on right now. So really, I wouldn't sell any I wouldn't sell any non-USD positions. So looking at my USD Turkish lira, did amazing. I should have sold some. In my other video, I said that I would sell some here at the topmost of this band, but I never had an opportunity to do so overnight last night. So basically, I missed a huge opportunity. But I never closed out any of my positions since that position I closed out here. So I'm still sitting on quite a bit of pips here. If we look at my positions on my favorite broker, OANDA, I'm looking at positive 578.6 pips right now in profit. So doing extremely well on this position, going to hold on a while longer since, frankly, there's no need to sell right now. How do we look? What are the prospects for the future? Really, I actually think that the USD Turkish lira will bounce off of this lower regression line. I don't see a lot more lower momentum. So I actually will not be selling anytime soon on another position. I'm frankly going to wait till the price of the price of the currency comes back to this point, 1.4365, roughly around there, to the midpoint of the regression channel, possibly to the Tenkan-san on the Ishimoku, before I'm willing to sell again and average down. Until then, I'm holding tight, and the commodity channel index really confirms that it is oversold right now. So not going to be selling at any time soon. This would have been a good selling point right here, up here, but I never had an opportunity to do so, so I missed that chance. Also, we're looking at a very high volatility. High volatility precedes low volatility, which we're going to see some downward momentum or upward momentum very soon, I would guess. So not going to do anything with my USD Turkish lira positions right now. Now my Aussie dollar positions. So here's really interesting stuff. Aussie dollar, we saw in the news here that on the Forex calendar that there was really negative news coming out of the Australian retail sales, and trade balance was average. However, the Aussie dollar, after that negative news went down, bounced off its lower regression off of the Ishimoku cloud and then went straight back up again. What does that mean? It means that, frankly, I'm probably going to close out some of my positions tonight in the Aussie dollar. I don't feel comfortable right now holding a lot of positions in the Aussie dollar simply because the economic news is not that great, and I think that this bounce was frankly just based on a risk-on behavior. Also, the Aussie dollar is quite a bit really overreaching on the daily chart. It's gone far too much, and we're seeing on the daily chart some divergence on CCI. And so I conservatively will close out some of my positions, maybe even half, around here tonight when the Australian market opens in about an hour and a half, 2 hours. And so just to be conservative, it looks like there's going to be some resistance here at 0.97, 0.98, and selling a little bit at the midline of this regression channel will make me feel a lot more comfortable. Also, if you look, the regression channel is starting to flatten out. So we may actually, in fact, see some ranging around here. And so really, I'm going to close out some of my profits and run for it in tonight, and as soon as the Australian market opens. So we're seeing some volatility flatten out. CCI is also looking to be overbought, and so it would be a good time to sell. Last but not least, my Hungarian forint, USDHUF. What can I say? When I sold here, I kind of regretted it. I sold a little bit at this point right here, and I thought, you know, I might have made a mistake. You know, it's going to come back. It did end up going back quite a bit against me, but then it bounced right off of its upper regression channel and frankly tanked in the last couple of hours. And again, it's more risk on behavior. It's not based on anything other than that. So really doing well. I'm up 1,157 pips on average on my USDHUF. Doing very well. Going to hold on to that for a while longer. I have no plans on selling more right now, nor do I have any plans on closing any positions out right now. I'm just frankly so far ahead, and the interest rate differential is so good that there's no point in selling my positions at this point right now. Also, to cover, my Aussie dollar positions were up 331 pips. So again, doing extremely well. I'm going to be holding on to my other positions and closing out some of my Aussie dollar positions tonight. My results really are doing extremely well. I am up 8.42% realized gains, realized P&L, and that's a difference of only 0.1%, and that's because of the yield gain. I haven't closed any positions, so I've had a pretty decent yield gain. So if I do nothing, if I just be a passive investor right now and hold on to my positions, I'll gain about a 0.1% return per day. Not bad, not bad at all, and triple that on Wednesdays. Now, because the market just started a hardcore risk-on behavior, my NAV, my realized plus unrealized gains, is now up to 29.94%. I'm doing extremely well right now, but you know what? The S&P 500 and the TSX gained quite a bit too. The S&P 500 nearly doubled, and so did the TSX. I gained about 8.5%. The S&P 500 gained almost 2%. Actually, rather a little over 2%, and so did the TSX. So we all did extremely well, but what I've also included now is my Sharpe ratio. So what does my Sharpe ratio look like? Yesterday it was 4.66. Today it's 4.59. This is a risk-adjusted return. I put in the risk-free return to be 2%. My standard deviation right now is, yesterday it was 1.05%. Today it's 1.13%. The S&P 500, if you were to invest in an index fund, is 1.36. So not bad. I'm doing extremely well. Higher Sharpe ratio is better. So if I can hold on to a 4.59 Sharpe ratio throughout this entire trading experience and on this model account, I'll be a very happy boy. Anyway, this is Dr. Good Vibe from OmegaSupreme.com. October the 5th, 2010, 6:08 p.m. Eastern Standard Time in Toronto, and I'll catch up with you tomorrow. Thank you and good night.